Brent crude just crossed $116. Nikkei is down 2,418 points. Kospi is minus 4.2%. Hang Seng is minus 2%. And GIFT Nifty, that's down 238 points, opening around 22,589. This is the last trading day of FY25-26, and it might be just ugliest one. So, but here's the level I'm watching for. So, this is India's pre-market edge before the noise hits. I'm Tanmay Kurtkoti, Season 2, Episode 10. Let's go. So let me start with why your screen is red this morning. So US markets reversed hard on Friday. S&P closed at 6368, down 108 points, minus 1.67%. Nasdaq finished almost 2.15% down. Dow futures this morning is sliding almost 0.33% lower. Europe was no better. DAX was minus 1.4%. CAC was minus 0.87%. FTSE barely held minus 0.5%. But today morning, and then Asia opened. So Nikkei crashed almost 2,400 points. That is minus 4.53%. Kospi is down 4.21%. Hang Seng has lost 2.03%. Taiwan is minus 1.94%. Jakarta is minus 1.45%. Shanghai is also down by 0.61%. Everywhere it's red, and everything is red right now. But now commodities, Brent crude is trading around $116, up almost 3%. WTI is trading at $103. Gold pulled back slightly to 44.64. Dollar index is flat, and then rupee. USD INR is at 94.81. But today is going to be an interesting day for USD INR, where we are seeing a change happening from RBI to banks. So let's have a look at that as well. So GIFT Nifty is down 238 points, minus 1.05%, where it is currently trading. That's where we are opening. And remember, today is the last trading day of FY25-26. Tomorrow is Mahavir Jayanti. Friday is Good Friday. You just get 3 trading days this week. That's it. But now let's talk about who's doing what and where this is get really interesting. So starting with Pro. So proprietary desk, the side changers as of Friday's close, pros were betting net short approximately 1,70,000 contracts in futures. That's not a hedge at all. That's a directional bet, and Pro is seeing more pain ahead. So FIs in the cash market, they have already pulled around 1,14,000 crore from Indian equities in March alone. That's roughly $12.3 billion. In derivatives, March outflows have crossed 1,30,000 crore. That's tracking towards October 2025 levels, the worst month we have seen in over a year now. And they are not just selling, they are writing calls, heavy call writing at higher strikes. That tells you FI doesn't expect a recovery. They are getting paid to bet against the upside. And now the clients, the retail, the crowd. A client is sitting net long still, 1,34,000 contracts, while pros and FIs are pressing shorts. Retail is holding long positions. Let me say that again. Smart money, both pros and FIs are on one side, the crowd is on the other. If you have been listening to this podcast, you know this, how this usually ends. The data doesn't lie, narratives do. So let's look at some screener prices as well. So screener has been in sell and is trading almost 900 points in profit right now. The projected level is around 800, and that's where the VWAP also is currently going to trade. So here's what I'm watching: the 22,300 and 22,400 zone. That's where I think could see a meaningful bounce, not a reversal, a bounce. There's accumulated demand at those levels from December and January consolidation. But don't confuse a bounce with bottom. This pain is not going away soon, but accumulation can be started. So let's look at today's Nifty Momentum portfolio is telling a different story in terms of sector rotation that we are seeing. ONGC is up by 4.3% when Brent is at 116. Oil producers win. Coal India is up by 0.3%. Power India, Power Grid is up by 0.24%. Energy and power are holding. What's getting crushed? Financials. Sriram Transport Finance is down 5.54%. SBI is down 3.90%. Tata Steel is down 1.76%. When FI sells, bank bleed first. And this is exactly why sector selections matters right now. Don't rush and buy everything. Pick the right sectors. Pharma, metals, energy, IT. That's where the smart money is going, and financials is where the pull off is happening. So let me try to give you a bigger picture. Today is 30th March, the last trading day of FY 25-26. Tomorrow the market is shut. FY27 starts on Wednesday, and here's what the last day of financial year means. Every fund, every institution, every portfolio manager is making the marking market prices as of close today. So this closing prices goes on annual report. It decides AUM, it decides performance fees, it decides bonuses. That's why selling pressure can intensify on days like this. Nobody wants to carry risk into a new financial year when crude is at 116 and FI is running for exits. My read, the pain is not going away soon. Iran is widening its targets. Trump is talking about talking taking Karag Island, Brent above 116. The war is costing $3 billion a day. FI has pulled over 1 lakh crore from India in 1 month, and the rupee is at 94.81. But the markets don't go straight down forever. I'm watching 22,300, 22,400 for a bounce, not a bottom, but I'll add some more equity over here. If you're looking to deploy, that's the zone. And when you pick the right sectors, don't buy index, buy energy, pharma, metals, be surgical. And here's the proof that systematic works. The Nifty Momentum 10 portfolio on RupeeCase today strategy is down 0.91%. Benchmark, the Nifty is already down 2% this week. That's over 1% alpha in a single day. The model rebalances on today, that is 30th March, and it in the previous rebalance has dropped BL and added Dr. Reddy. No emotions, no headlines, just price momentum and rotation. The strategy has delivered good returns, excess alpha over the benchmark. Track it live on rupeecase.com. That's your edge for today. If this added value, share it with one trader friend who needs it right now. Subscribe on Apple Podcasts, Spotify, or stream it live on rupeecase.com. I'm building RupeeCase, India's systematic investing terminal. Link in the show notes you just got earlier. See you all tomorrow.